Mic test 1, 2, 3. Hi, very good morning to all. Kelvin here again. Welcome back to today's Daily Dose of Market Insights. Very good morning. Today will be the Friday, the 19th of September 2025. So as usual, before we kickstart our gist of the Daily Dose for today, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, let's have a quick recap what has taken shape yesterday in terms of the intraday movement on these broad-based cross-asset classes, ranging from the FX market, the commodities market, and as well as the major stock indices, and also the relevant news flow, as well as a key economic data release that has taken shape yesterday. So let's look at the performance of the US stock market first. All right, so the performance of the US stock market has been rather, I would say, firm. That came in within our expectation. So still recall that yesterday's daily dose where I covered a full suite of intraday technical analysis outlook on the three major US dollar indices, ranging from the Nasdaq, the SPX 500, and the US Wall Street 30, which is representing the Dow Jones Industrial Index. All three of them has continues to bounce above their respective short-term pivotal supports level. So what we could see over here is that the strongest will be the Nasdaq 100, which is up by 0. Okay, not the strongest, the second strongest is the Nasdaq 100, which is up by 0.95%, and the strongest is the Russell 2000, which is up by 2.51%. So this Russell 2000 has been lagging behind the other three major US stock indices because so far the other three has managed to make fresh all-time high. Only recently, about 4 weeks back, the Dow Jones Industrial Average has joined the foray together with the Nasdaq and SPX making fresh all-time high. However, the Russell 2000 hasn't yet made a fresh all-time high, so it's only up by 2.15% so far. So if you look at the chart of the Russell 2000 over here very quickly, which is the small cap company. So let me open up my chart for you guys to see. Just a quick one so that you guys can have a better visualization of what I'm talking about. Yeah. Okay, so this will be the Russell 2000, the barometer for small cap US company. So a very strong push up over here. So in fact, oh yes, yesterday it made a fresh all-time closing high. Okay, my apologies because I was not aware about that. So the previous fresh all-time high was at 2,458. So this was actually printed in the 5th of November 2021. Got tested it, but can't close above it on 25th of November 2024. So that was during the onset of the US presidential election. And finally, yesterday, it managed to have a daily close above this 2,458. So now all, just a bit of mistake, I rewind earlier on. So now all the 4 major US stock indices managed to reach fresh all-time high, with the most lagging one, the Russell 2000, finally made this fresh record high yesterday. So all of them has been pretty much bullish in the limelight of the start of a potential interest rate cut cycle by the Fed. So if you look at the CME Fed Watch 2, so the CME Fed Watch 2 continues to show very strong probability that the Fed will do 2 more interest rate cut this year, as being penciled in by the dot plot, which I mentioned earlier yesterday. And if you look at, okay, give me 1 second, let me very quickly. Okay, quick one. Okay, so if you look at the aggregated tab over here, okay, sometimes it takes a bit of time. Okay, yes. Okay, so right now a high chance of 91%. The Fed funds futures trader are pricing in another 25 basis point cut after Wednesday's 25 basis point cut to bring it down to 3.75% to 4%. And the third cut of this year will come in on the last meeting of 2025 at another 25 basis point on the 10th of December 2025 FOMC meeting. 83% chance, also a high chance that it will bring it down to 3.5% to 3.75%. And the Fed Funds Futures Trader pencil in 3 more cuts in 2026 at least. The next cut will be on the 83% chance on the 18th of March 2026, followed by the 17th of June 2026, a high chance of 73%. Then thereafter, you have it will tends to hold in July and September, October next year, and the third cut potentially coming on the 9th of December 2026, which is rather a high chance as well, 61% chance to bring the Fed funds rate down to 2.75% to 3%. So we start to see a gradual pricing of interest rate cut, not every meeting for next year, but at least pencil in 3 interest rate cuts. So that actually also create a bit of additional liquidity into the US financial system, boosting the small cap company, which is pretty much reliant on longer term, reliant on cheap funding to actually grow their business model. Right, so that's for the small cap company. Then yesterday, the US technology stocks, the big cap technology stocks also benefited from the semiconductor sector, or the semiconductor subsector within the technology broader base sector. So Nvidia rallied by 3.5%, and also what's interesting is Intel rallied by 22%. So that is a very significant gain in Intel price on the intraday basis. Why? Because yesterday this news flow is very likely to be government related, driven by the US White House, that Nvidia decided to make a $5 billion investment into Intel, further solidifying the semiconductor industry in the US. So we know that Nvidia has been a market leader in the semiconductors sector in the US, especially on Nvidia cutting edge graphic processor chips that is being used to train AI models, and Intel has been kind of lagging behind in this race. So the decision by Nvidia to actually invest in the market is more it's more like related to government push to actually solidify a US edge in this global race to build high-tech cutting-edge semiconductors related products, as its reach is as it's continue to actually indirectly put it away, has this kind of high-tech war between US and China. But nevertheless, from a stock market perspective, that actually supports a positive feedback loop into the Nasdaq 100. So if you look at the Nasdaq 100 yesterday, very quickly, it actually rose, all right, higher and make a fresh all-time high. Okay, hit our resistance level 24,530, 24,570. So right now, for today, I will actually look at the first support level be at 24,385, followed by the pivotal support right now to tighten it to this 24,140 level, all right, which is at the medium term minor ascending channel support drawn from the low of 3rd of September. All right, and also to the FX market over here is that, yes, we know that additional liquidity from the Fed, but right, it should be continue to be negative for the US dollar, but the US dollar seems to be doing a bit of front running before the FOMC meeting decision on Wednesday. So thereby we start to see a bit of profit taking for US dollar shorts. So yesterday the US dollar continues to rose, all right, over here. So if you look at the US dollar index yesterday, okay, it actually rose to add positive 0.36%. So 2 consecutive days in a row, ex post FOMC meeting. So there was profit taking in the US dollar shorts position. So what interestingly, when it rose, it closed at 97.36, very close to that 97.30 level that was taken down 1 day before the FOMC meeting. So this 97.3 level is very important. Again, why? Because I go to the monthly time frame. So on the monthly time frame is actually the long-term ascending channel support that I drew from the low of May 2011 that managed to keep this long-term circular bullish uptrend intact during the sell-off in May 2021, and also the recent sell-off in June, July, and August this year. So this time around, we didn't have, right now we are now approaching the week, the key risk event week, which is the FOMC week, which is already gone. And if today we have to have managed to have a weekly close below 97.3, that would be rather negative for the US dollar index. Why? Because if you look at it right now on the weekly candle, it's showing a bullish hammer candlestick. So if today it can't close below 97.3 and manage to maintain the 2 days of positive momentum, potentially there could be a squeeze up back into for the US dollar shorts. That means US dollar shorts could continue to see potential we call it unwinding of shorts position, and that could actually lead to a minor bounce back up to the US dollar. So the next resistance level to watch, right, in the short term on the US dollar will be at 98.10, which is very close to this minor descending trend line that is still in shape since 22nd of August, and also right below the 50-day moving average as well, where price action has been trading below it since 5th of September, which is the early start of this month. So that will be 98.08/98.10, then followed by 98.95, which is the bearish breakdown of this bearish Marubozu candlestick on 1st of August, now turns into a pullback resistance. So these are the two key short-term intermediate / short-term interest resistance to watch on the US dollar index if this bounce were to actually materialize today. Right. So, but however, if it starts to close below 97.3, indicating that whatever bounce in the last 2 days has been negated, and potentially the US dollar weakness could prevail on based on purely what's the price action is doing over at the US dollar index. All right. So now, if you look at the performance of the US dollar index, this was yesterday's 5-day rolling performance as of now, 19th of September, we are seeing. So the dollar bounced over here. But what's interesting is that as we are speaking in today's Asia session on a 1-day rolling performance basis, the dollar right now has started to collapse over here since the start of today's Asia session at around 10 a.m. Since 2 hours after the start of today's Asia session, pardon me, at 10 a.m. Singapore time. So at 10 a.m. Singapore time, we start to see the dollar weakness prevailing. So the dollar now has starts to slide against the Aussie, against the CAD, against the Kiwi, and most importantly against the Japanese yen, which is now almost at the unchanged mark over here. So what's going on in the Japanese yen very quickly is that Japanese yen, there's two key risks event that is taking shape in the Japanese that may impact the Japanese yen. One has already passed, which is the so-called the inflation rate data. So the inflation rate data, the market participants will be focusing on the core interest rate over here. So yes, there's some media that's reporting the core inflation. So core inflation is a bit strange in Japan. It doesn't exclude energy. It's only exclude fresh food over here. So even though the core inflation rate over here, it actually exclude fresh food but includes energy, it increased at a slower pace in the month of August 2025, easing for the 3rd month in a row over here. So there's initially we thought there's a deceleration of inflation trend growth in Japan, but that is not one way to look at the inflation trend in Japan. We should actually exclude energy prices as well over here. So if we could exclude energy prices over here, that means that is much more we call it a robust way of analyzing the inflation trend in Japan by looking at the core inflation rate. So you look at the core inflation rate that exclude fresh food and energy, it actually continues to stabilize. It did actually decelerate for a 3rd consecutive month. So it just inched down slightly lower by 1 basis point to 3.3% from 3.4% to 3.3% in August, pardon me, from 3.4% in July. So you look at the 10-year trend, it still continues to remains in a upward trending fashion since August 2024. So that is the 2% target that the BOJ wants to achieve in the long-term inflationary trend after that previous 2023 to 2024 rather steep deceleration of inflation growth for the couple of we call it 10 months during this period. So thereafter it starts to revert back to its upward momentum that has taken shape since 2022. All right, so that actually also allows the Japanese yen weakness to actually get trimmed off yesterday, and in fact in today's Asia session as well. So right now what we are seeing over here is there will be a Bank of Japan meeting, right? BOJ meeting over here. I think the meetings is not out yet, right? Let me do a conclusion. Let me what's this? The calendar pencil in at 11 a.m. Singapore time. Okay, BOJ interest. Okay, it's not out yet. All right. So this BOJ interest rate decision, market participants has already said that there will be no interest rate hike, 0.5%, because of that politically that mild political uncertainty surrounding the leadership of the Japanese coalition government right now, because last 1.5 weeks, the current incumbent PM Ishaba resigned over here. So because due to this political vacuum that is still prevalent in the Japanese political cycle, so Bank of Japan is very unlikely to actually kickstart another interest rate hike over here. But however, what's interesting over here is prior to this interest rate decision meeting, market participants are still looking for another at least a 25 basis point hike, not cut, before 2025 ends in Japan over here, by looking by pushing up the 2-year government bond yield. So we know that 2-year government bond yield, not even in Japan, globally, they are the most sensitive to changes in monetary policy stances in respect with respect to the various we call it countries central bank monetary policy stances. So the Japan 2-year government bond fell, pushing years to the highest level since 2028, tracking moves in the US ahead of Bank of Japan policy decision over here. So what we could see over here is that okay, let me share with you over here. Okay, so right now the overnight index swap market is still showing at least a 58% chance that the rate hike by by at least a 58% chance of a rate hike by BOJ by the end of the year. So market participant is still looking for at least a 25 basis point cut in a 25 basis point hike, pardon me. So market participant is still looking for a 25 basis point hike by the Bank of Japan before 2025 ends. So that actually causes the dollar yen to actually inch down as you are speaking right now. So if you look at the interest rate now, it's down already. So it seems to be okay. Let me look at the chart of the dollar yen first, very quickly. So if you look at the dollar yen over here, it's also been trading in a very frustrating sideways range configuration. So by looking at the chart of the dollar yen, where is it? Okay, very quickly, this should be the one. Okay, so this is the dollar yen. So the dollar yen squeeze up above the 20 and the 50-day moving average, and right now is resting just below the 200-day moving average, and also very close to the upper limit of this minor complex sideways range configuration since the low of 24th of July 2025. So very quickly, if you look at the daily chart of the dollar yen, like I shared with you previously, is that it continues to be trapped within these two gray lines here. So this gray line, the first gray line is the upper limit of ascending wedge configuration. The bottom of this gray line is the lower limit of this ascending wedge range configuration. So it's a very choppy range configuration that has been in place since 22nd of April 2025 low. So ex post FOMC, it tested the 145.95 lower limit of the medium term ascending wedge range support level, survived, managed to bounce for 2 days, and right now is approaching the 200-day moving average, which is capping this minor sideways range configuration within this medium-term ascending wedge range configuration that has been in place since 24th of July 2024 low. So this is the minor ascending range configuration, minor sideways range configuration within this medium-term ascending range configuration. So take it as a range within a range. Right. So that's actually explain why the price action on the very short term is very choppy for the dollar yen. So anything that's in between, we get chop up due to the very volatile movement. So right now, it's actually back at the top of the minor ascending, minor sideways range configuration, and so right below the 200-day moving average. And what's interesting over here is that the hourly RSI starts to exit from the overbought level after flashing out a bearish divergence signal over here. All right, so with that, potentially we may now start to see it floating back down towards the middle part and the lower limit of this minor sideways range configuration, with the next two support level in near term coming in at 14750, 14705 on the intraday basis over here. All right, so that's for the Bank of Japan. So very quickly, is that the Bank of Japan, has the news been released yet over here? Okay, so there's no release yet, Bank of Japan. All right, so let me share with you guys. Okay, so let me go to the trading economics calendar. We do a refresh whether the Bank of Japan. Okay, no, it's not out yet. The decision is not out yet. All right, so Norma, let's move on over here. So then after that, yesterday we do have the Bank of England decision as well. So Bank of England yesterday kept interest rate unchanged as expected, and based on that over here is that but however, there is this news media report where the governor gave a kind of a interview to the media, saying that the bank has not done cutting rates yet, but due to inflation is an upside risk, then therefore traders do not expect any more easing from Bank of England this year, and only fully price in one more quarter point reduction by the end of 2026. So because of the Bank of England Governor Andrew Bailey rather dovish remarks, saying that the bank may not have done cutting interest rates yet, due to a media interview, that actually causes the sterling pound to actually plunge yesterday. So if you look at the sterling pound over here on the intraday basis, very quickly, where's the sterling pound? Yeah, over here. Okay, so the sterling pound. So the sterling pound yesterday plunges below 135.95. So that was my Titan short-term pivotal support level that I have. But what's more interesting over here, the plunge itself now starts to rest right exactly above the 20-day moving average, and it's a ascending 20-day moving average, and also the bullish divergence has been flashed out on the hourly RSI. All right, so indicating that yesterday's downside momentum has starts to reduce, expose that a rather dovish remark made by Bank of England Bailey, still hinting of a possible interest rate cut this year, even though the short-term interest rate futures contract trader in UK does not price in interest rate cut this year, they only price in a quarter point interest rate cut in 2026. All right, so what's interesting over here is that there are two levels to watch in the short term for the sterling dollar for today. So 135 figure level, right exactly slightly below the 20-day moving average, which is the minor swing low area of 11 of September at 8 of September, and also yesterday's pivotal support that's been taken down at the 135.95 level. So if we start to see a reintegration break above 135.95, then potentially we may start to see another fresh bullish up move for the sterling dollar for today. All right, so that's the first segment of the daily dose for today. So let me move on to the second segment. So second segment today will be the condensed version. So I only cover one intraday technical outlook, will be my chart of the day that I find very interesting in terms of a technical configuration. So my chart of the day for today, I will actually featured this particular commodities, which is gold XAU/USD. So gold XAU/USD will be my chart of the day. Why? Because right now it's resting right exactly at a key inflection level, which is my pivotal support that I highlighted yesterday, 3,644 slash 3,620. A bit of excess over here, given this is the minor congestion area formally that has been formed on 10 of September to 15 of September, close to 5 trading days before it did that last impulsive push up, before that profit taking takes shape, expose FOMC, and also resting right exactly at the minor ascending channel support that I drew from the low of 22nd of August. And also right now the RSI has started to flash a bullish divergence, while price action yesterday continues to show a series of same low, but whereas the RSI now has started to slope a higher low, indicating that bullish momentum may start to short-term bullish momentum has started to creep back into the gold XAU/USD. So this will be my chart of the day. First resistance level to watch will be at 3,688. So this will be my upside trigger level, given that this candle will be the candle opening hourly candle very close to the minor swing high area of the onset of the release of the FOMC statement, where after that price momentum comes maintain that bullish momentum and starts to come down during the onset of the Fed chair rather dovish press conference. So this will be a very key upside trigger level, 3,688. So a breakout above 3,688 will increase the odds of another round of minor, fresh, bullish, impulsive upmove sequence unfolding for Gold XAU/USD. For the next intermediate resistance to come in first step will be at 3,725, followed by 3,750, which is a Fibo extension cluster level. Only a bearish breakdown below 3,620 will invalidate today's bullish/recovery scenario on Gold XAU/USD to see a deeper minor corrective pullback unfolding towards the next near-term support level at 3,560, which is coincide with the upward sloping 20-day moving average. Right, so that sum up the second segment of the daily dose, which is the chart of the day. So let me very quickly move on to the last segment, which is what are the key data to look out for today. So for today's daily dose, very quickly, the key data to look out for in today's session. In the European session will be retail sales over here that could influence the movement of the sterling dollar and the sterling crosses. So retail sales in UK will be out at 2 p.m. Singapore time. Then thereafter, for the US session, it will be rather quiet. No much of a key data and key data or economic data, and as well as Federal Reserve official speeches to look out for. And over the weekend, do take note of there will be this interest rate decision from China, the loan prime rate 1 year followed by 5 year over here. So if market is not expecting any move on the loan prime rate on China, but if they surprise the market participants by cutting these rates over here, given the fact that retail sales and industrial production came in a rather soft number this week, so they may potentially do something to actually reduce the interest rate. So if they do cut the interest rate this weekend for China, which will be at 9:15 a.m. on the Saturday, the 1 year and the 5 year loan prime rate, that could trigger a positive feedback loop into the Hong Kong stock market and as well as the China stock market. So with that ends today's segment of the Daily Dose. I'm Kelvin here, wishing you all a great day ahead and as well as a wonderful weekend, and we shall speak again on Monday. Thank you.